All right, everyone, welcome back for another episode of Carnivore Trade. Today is Monday, November 7th, 2022. If you've not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, markets green again today, so following through from the up move on Friday. We had a nice little squeeze into the close, you remember, last week, and then really just kind of sideways for probably about the first 2/3 of the day. It was really kind of a tight, really boring range. It almost looked like we were just going to sit tight until the election. And then, towards the afternoon, we got a nice little float up and kind of finished with a little bit of flagging here. We did go up and test a 50% fib. And I'll show you guys that on the spiders right here. So just a little retrace into the 50% fib from last week. So we got up into that, and we're into that 50-hour moving average as well. Spiders also were able to close above the 50-day moving average today. So a little bit of a victory there for the bulls. Right now, the 50 moving average is minor. We've traded through it a lot, but it is a psychological level, and it does kind of influence algo behavior to an extent here. But overall, markets with a decent rally day here. Now, it was kind of split across the board here, especially like in the big tech department. Amazon red. Apple did manage to finish green, but you can see here it was red most of the day. So not really showing much leadership. Then you had really kind of Google and Microsoft really leading the charge there. On the other hand, Tesla, new 52-week lows, new 52-week closing lows, down 5% on the day. Take a look at this broadening pattern here on Tesla. So it looks like it may go down to that level that kind of coincides right around 188, 185, somewhere in that area. So Tesla definitely on the weaker side. And you had kind of a split tape here with some things. Like typically we've been seeing the Russell as the leader here lately. That was the least performing or least best performing indice today. So, and you can make a case you're starting to put in a possible little bear wedge, but bear pennant there inside bar 1, 2, 3 moving up there. You can see the same thing here on the ES as well, though in fairness, you did manage to crack above that by the close. We'll see what it does tomorrow. Maybe it gets back in that channel. Either way, I think, again, we mentioned this over the weekend, but it looks like we're showing some complacency here. The VIX here, again, red on the day as you'd expect with the market up. Didn't take out Friday's lows, but, basically got very close. And if we have CPI in a few days, we have an election tomorrow. I don't think anything crazy is going to happen with the election. It could. And it's just very strange because usually, even if there's just like a 1% chance of something happening in the election, usually these, big boys want to at least be hedged, especially in a market that's been as volatile. And, we've been in a bear market for the last 10, 11 months. You'd think that there'd be hedging going on, and there's not. So this is showing some pretty egregious complacency. And we saw a lot of guys offsides last month with being overhedged and expecting a crash. And now it's almost like we're expecting a total melt up. So, if that CPI comes in hot, it could get pretty ugly pretty quickly, given how cheap this looks here. So that is a problem for the market here. I won't take anything away from the rally, except for the fact that, and I always talk about the 2-year, which was down 15 basis points today, but the 30-year really got whacked pretty good, down over 80 basis points. And take a look at this hourly bear pennant, which started to break down around 9 a.m. And so the 30-year was selling off all day long while the spiders were moving higher. So that's a divergence there. Now, does anybody want to bet that the stocks are smarter than bonds? I don't think so. And essentially what that means here is, you look at the 2-year, this is how the NASDAQ and really the whole market has to be valued, but lower lows, lower lows, lower lows. ZB here, the 30-year, lower lows, working on another lower low. And the triple Qs, they'll have a higher low in place. The spiders have a higher low in place. So one of these is lying. I know which one I'd rather side with here, but in the meantime, we have to respect the market. It can still move higher here. To take a look at the transports and the semis, we always talk about those. You do have a higher high here on the daily DJT now. So, higher lows, and now you finally made a daily chart higher high there above that gap. I think this still can get to about 14,000. I told you guys that was going to be a pretty good level of resistance for the DJT coming up. Wasn't sure if it would even get there, but now it's looking like it, it definitely could, especially if we have some type of you know, maybe a gap up or something like that. I don't know. Again, I don't think the election is going to really do that, but that's where I can see the DJT going here in the near term. You did have a 3-bar surge, so it may pull back tomorrow. But overall, you got to respect that when it makes a higher high. Same thing with the semis. The Hang Seng is kind of helping keep this off the lows. But again, higher low, and now a daily chart higher high, reclaiming that 50 moving average. Again, it's still minor. It's still a minor moving average. You've traded underneath it for too long to make it major. But again, it's a psychological level. It does influence the algos, as we said. So nothing to say it can't get up to this gap fill around 200. And again, you did flag here, so it does have a little bit of gas in the tank if the market holds up. But again, I like to see the semis and the transports lead. They are doing that right now. The problem is, big picture bonds are way more important, and they're telling you that there's a problem, and the VIX is way oversold here. So these are the problems I can see. I mean, if it were me, I'd want to be hedged going into CPI, given how complacent this market looks. But anyways, we talked about bonds, semis, transports, cloud software here, getting a bounce basically off that 52-week low. That's your double bottom right there. Close enough for government work here, a little tail candle on Friday, and then kind of an inside day today. So nothing crazy here. Cloud software continues to be a little bit behind the semiconductors, up 1.33% on the day. Let's not make too much out of it, but this is not really showing a whole lot of promise here. So again, when I say mixed bag, you know, again, like we had Microsoft, which was just a powerhouse all day long. And there was a couple of stocks that really pushed higher, you know, semis, obviously, we just talked about, transports, and then you had cloud software not doing a whole lot. It wasn't a broad-based rally today that really, you know, was a super convincing move. So anyways, IGV here, transports, we talked about, rates, we already got to, XHB, again, still kind of just chopping in this range. Daily chart, you could make a case that has that same kind of IWM look. So possible little like bear wedge there on the XHB, but more importantly here on the weekly time frame, this is still a weekly bear base and sidebar. So we got to be careful with the home builders here. ITB, same exact chart there. And then the VNQ here, finished actually unchanged on the day. Again, if you get above this neckline, that can trigger an inverse head and shoulders, which also coincides with that downsloping 50 MA, but that has not triggered yet, so we'll not entertain it until if and when it does. XLF here. So XLF continues to be a strong sector, up 1% on the dot here, and you're still kind of chopping around. So get an up move and, you know, kind of just sloppy bullish consolidation. This still could get like another zigzag. I wouldn't rule that out. One thing I will say is some of these banks, specifically JPM and Goldman, this is not what a bottom looks like. Like, I know this is a fierce rally, but remember a few months ago when I was talking about the broker dealers, how you didn't build supports here and that this was just going to come right back in. It's the same thing here with Goldman, JP. These are getting ridiculously extended, and this is not what a bottom looks like. A bottom, you get a V shape and then a good pullback or a flag, and then you continue higher. That's what accumulation looks like. This is just squeezing. So you know, once those forced buyers are exhausted, there's going to be nothing left but sellers. So just be aware of that. You got to respect it for now. They are holding up really well. I can't say anything bad outside of the fact that they're very stretched here. BAC, a little bit less stretched. That's kind of stalling out at that 200 moving average. But again, this is definitely a squeeze. You got to respect it here, but that's really all it is. All right, so yeah, broker dealers, just kind of mentioned that. Again, you do have a higher high there. Again, that's holding up much better than the rest of the market. Nothing really too new to add there. Crude here, kind of an inside day, so no confirmation of that inverse head and shoulder break. And again, you stalled back down, just back below that 200 moving average. So again, still, it didn't need to follow through to the upside today. You know, you had a nice surge Friday, so an inside day, there's nothing wrong with that. What you don't want to see is this break back below those moving averages. And you don't want to see a weekly close back below this neckline, because that would, to me, invalidate the pattern. Overall, I still think crude, you know, it's holding up really well. I can't say anything bad about it. But if it does start to break down, you know, maybe it could, you just watch this lower low here, because if it does, it could still head down to that 75 handle where that lower trend line is. So again, this is all speculation. It's still fine for now. Just want to put that out there for everyone. Anyways, XLE, again, continuing to pile into this. Another 52-week high today. It looks like almost a 52-week closing high. Or is that, oh no, it doesn't look like we quite got there. But Very close. 93.28 is the high. 93.31. So we missed it by 3 pennies here. And the close was, yeah, about 30 cents off. So either way, basically into double top now. It's stretched. It's overbought. Do not chase this up here. Same thing I said months ago. I said, don't chase XLE up here. It's going to correct. I'm saying the same thing now. It will come back in. You'll get a chance to buy it. Do not FOMO into these. XOP, you know, nice move. Again, I said on Friday, this is not really a breakout candle, but hey, you got to respect it today. So nice move there for XOP. You do have a gap fill right up at 162. We'll call it 163 there. So maybe that's where it goes in the short term. But again, it's still kind of getting stretched here. Don't chase them up here. You'll get a chance to buy them cheaper. OIH, new 52-week highs, and just a power move here. Again, this is extended as can be. So 198 to 317 from 926 to 11.7. Does this look normal to you at all? I mean, these are big cap companies, right? This is not a meme stunk. So don't get caught chasing these. You're going to get wiped out. So we also have Oxy's earnings tomorrow, and you know this thing is also run up into earnings. So the market's already pricing in the best. A lot of the time you get those sell to news moves. I just want to caution against that. Anyways, Nat Gas. So I did a live stream for members last night, and I saw the gap up here. We did the live stream right at 5:30, and we went through the Globex Open. We gap up to that 7 handle, and I said, wow, that would be a great short right here for a quick little pullback. I didn't think it would fill the gap today, and we didn't quite get there, but as I was doing my members video today around 3:45, this thing started dumping pretty sharply. You see their intraday stalled out at the 10-minute 200 moving average there. And on the hourly, if I can find it, on the hourly, you basically kissed that 50-hour moving average. Now it's trying to bounce here. But as soon as you broke that 685 level, was kind of that opening range there, this thing just tanked. And they call Nat Gas the Widowmaker for a reason. But in any case, you know, I do think there's a really good amount of support there at that 650, 645 area. The thing is, how many people are watching that area, right? So there's a pretty good amount of velocity behind that little tank there. So I'd like to buy it here, but I could also see them not quite getting it there. Just like when we got up here at the bottom, we got so close to gap fill, and then they pushed it back down. So either way, I do like Nat Gas. I think it's bottomed, but yeah, that gapped up, and that was just way out of line. I mean, you know, closing at 650 and gapping up to 7. That's, you know, a little egregious there. But in any case, Nat Gas holding up well. I told you guys it should get up to 750. There's a chance it could still, you know, flag here and then push to 750 before maybe rolling back over and coming back into that gap. So that is a possibility as well. Anyways, dollar index. So dollar was lower today with yields moving down. So a little bit of a divergence here in the short term. Again, this is pushing through that trend line. We violated it a few times, so that is noteworthy. But looking at the most recent kind of channel, this is still just kind of really bullish flagging. And again, weekly inside bar. So we have to respect that above the moving averages. Is it overbought? Yes, but it is not technically damaged right now. And it continues to remain strong, even despite the recent pretty wide range sell bars. And again, just one more thing. So Tuesday, Wednesday, Thursday, you know, if we're down here into this 100 moving average, and we're into this lower trend line on Thursday or Wednesday afternoon, and the VIX is testing this trend line, that's just going to be, it's like almost serendipitous. Like that's, and I mean, they're going to be oversold going into that too. So just, you know, be aware of that. It's definitely interesting. Keep it on your radar there. Again, just kind of goes to the theory here that, you know, like whenever something's selling off into news, I'm always kind of like more inclined to think it's going to rally, and vice versa. So just keep that in mind. Be watching that going into the middle to end of the week here. Anyways, gold, again, much like crude here, micro inside day. Let's not make anything out of it. You had a huge surge. It's really just catching its breath here. I don't have any problems with it right now, other than the trend is down. I still think gold has one more flush in it. But for right now, nothing to say. I can't get a little bit of a bid. Your next major levels around that 100 MA, around 1725. So we'll be on the watch for that if and when it gets there. Silver here, again, same thing. Actually finished Well, the futures are up 40 basis points, but again, kind of an inside day, nothing really to add to that. Platinum, on the other hand, powerhousing up. So it looks like it wants to get up to this upper trend line. I drew that in today. You've got a channel here. And again, look at how much, this is that W pattern I was talking about. And really nice surge there. That should get up into this upper range, 10, 12, 10, 15, somewhere in that area. But platinum continues to be strong. Copper here, again, a little inside day. I don't like that gap down though. I would have liked it a flat open and then kind of a hammer. So a little bit of weakness there from copper with good volume. But for right now, it's still an inside pattern and we'll respect it. It's hanging in there and there's no real problems to speak of. As for Bitcoin, that did back off a little bit today, so down 70 basis points, but no problems. Get a nice little inside bar, a pop, and now another little pullback. So no problems here. It's above those moving averages. Ether in better shape here. Again, a little micro bull flag. So that could still get a bit up here. And again, get to that 1800 handle, maybe a little bit higher. Again, crypto's hanging in there for the moment. So we'll give it the upside bias for now, as long as the equity markets hold up. But again, lastly, let's just watch this. You could make a bear wedge here. That is certainly possible. But right now, transports and semis are giving you kind of at least a short-term green light. But do not discount what the ZB here, the 30-year note and the 2-year note are doing. Don't bet against bonds and don't allow this, rally here, these squeezes to get you complacent. So anyways, here, it's going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.